Hi, friends. Steve Burke over at Strong Wealth Mortgage. Hope you all are doing fantastic. I just wanted to take a little bit of time today and share a little bit about financial literacy with you. So, obviously, many of you know me from a while back, and the Strong Wealth team is now excited to be part of NEO Home Loans for the majority of this year. And this is particularly exciting for me because with my CPA background, I've always wanted to help clients to be able to become not only successful homeowners, which I think we've done over time, but also build wealth over time through real estate and smart financial decisions. So this is going to be one of the many financial literacy things that we're going to do over time and provide you with some additional value that hopefully this makes a little bit of an impact for you or someone in your family or friends or anything like that. So the other cool thing is we also own a bank now. So that's going to give us a lot more flexibility and things that we're going to be able to do for our past clients, our current clients, and future clients. So let's get this thing started. And we're going to talk about 3 easy things that we can do to get more control over our finances. Okay. So these are pretty basic stuff that anybody can do. And I'm just, as a matter of fact, I'm sharing these with my 3 kids because I made a lot of mistakes early in my life with regards to my finances. And I'm trying to keep my kids from doing the same thing. And so I've shared these with my kids, and it's just very basic stuff and they love it. And it's easy to do. So keep in mind the future is your responsibility. Okay. So there's such a big need for confidence in real estate and personal financial, more now so than has been, basically for a long time. So managing debts and liabilities as inflation rises, navigating ever-changing economic conditions like an impending recession, not knowing where to invest your money, and an increasing need to build an emergency savings account. These are all real problems that are existing today, and more so coming out post-COVID than we've seen in quite a while. So there's just a really big lack of understanding of financial planning and basics of personal finance. And this leads to a perpetual cycle of poor financial decisions. And poor financial decisions by parents or someone in the family may have a negative impact on anyone else that are around them, their kids, anything like that. And it can turn into problems that lead for generations. So again, the future is our responsibility. To the next slide. All right, so what are those 3 things? We're going to go over them in a little bit more detail, but number 1, we can maximize the interest you earn on the money in your checking and savings accounts. We'll go over that in a little bit more detail. We can set up an online investment account with auto deposit, and we can use technology to track budgets and net worth. All right, these are simple things that you would think are pretty simple and pretty easy to set up, but you just don't actually do it. So it's something, again, a mindset that, you've got to say, I'm going to take control over this and I'm going to do these little things, and they will start to make a little bit of impact, which will snowball over time. All right. So the first one, maximizing the interest. So I'm going to show you some of the current savings rates that you get from your 3 largest banks in the country. So you're looking at Bank of America here with a 0.01 rate or 0.02, 0.03, depending on how much money you have. And these might fluctuate, and they may have other money market accounts that give. But basically the premise here is that they do not pay you for your deposits very well. All right. I see so many clients, a lot of young people that have $25,000, $50,000 ready to go for a house, or they've been saving it up to go for a house, and they've been earning interest with one of these banks at like 1%, 0.1% interest over time, and they've missed out on an opportunity to have a few $1,000s more in that account to go towards their home. Maybe it's to buy furniture after or to do something else, but they've missed out on a lot of different things, or anybody's missed out on these things if you're just taking what the big banks are giving you. Here's Chase. Chase has really low standard rates as well. They also, in a lot of cases, a lot of these banks still have monthly fees depending on your deposits and things like that you keep in the account. So that's other things to be aware of. And then finally, we'll see Wells Fargo, again, a little bit more than the others, but nothing spectacular. All right. And then I'm going to use our new bank as a plug here, but just to give you an idea of what you can find out there. And there's other banks, credit unions, things like that, that are offering money market or high yield savings accounts that are pretty good. But right now you can get, you should be able to get easily over 3% somewhere. All right. So and that's in a savings account. Now, we actually have a checking account, which is pretty rare out there, that gives 2.2% basically plus on opening a checking account. So any of your balance in there can earn up to 2% or 2% plus over time. And then our savings has a 4.59% interest rate right now, which is pretty close to the highest that's out there. So you can actually just, any money that you've got in the account, you can earn 4.5%. And I'm going to show you the impact of that. And again, there's other banks, credit unions, things like that, that do offer this. But if you're in a situation where you're only earning 0.1%, you need to really think about that, especially if you got a decent amount of money in the bank just sitting in cash, which a lot of people do. So let's do the math. Checking accounts. If you had $5,000, you'd be looking at $1 per year with one of the big banks on average. If you had 2% checking with Luminate Bank, you'd have $100 plus per year. $10,000, you'd get $2 per year with the big banks. With a 2% checking account, you'd have $202 extra dollars per year. And then with $20,000 in your checking account, average, you'd get $4 per year from the big banks and $400 per year with a 2% checking account. So just think about an extra $100, $200, $400 per year in your pocket to do, that's a few dinners out, something to do with the family, a weekend or weekend at, you probably can get at least a few tickets to Disney or something like that and go from there. So a lot of cool stuff to do if you put that money to work for you. Now let's look at the savings account, and this is where I really see a big factor. A lot of clients, $10,000. It's either $2 per year or $459 per year. $25,000, $5 per year or $1,147 per year. $50,000, $10 per year or almost $2,300 extra per year if you have $50,000. And I see a lot of people with $50,000 in the bank ready to buy a house, and they've been saving it over time, and they could have earned a few $1,000s more in interest over time with that money. And then $100,000, look at that, $20 per year or almost $4,600 per year. So we do the math. You need to make sure that your money is working for you. If you have it sitting into an account, get it into a high yield savings account somewhere, whether it's with us or someone else. Get it into high yield savings and start earning money on that. Even start little. Start small and get to that point where you can accumulate it. And this compounds. So every month you earn interest, and then that interest earns on top of that. So, it's a great way to start, especially to get your kids in that mindset to start to do these type of things. And then it just puts them in that savings and wealth generating mindset. All right. So what do we got next? All right. So next, number 2, easy thing to do is set up an online investment account with an auto deposit. All right. So you can see here from the chart, this is basically your filling your buckets. So they always say to start with, get your emergency fund, get 3 to 6 months of what your expenses are into an account, into some type of a savings account, of course, earning big interest on it, and get that number 1. Then you should be, the next couple of buckets would be making sure you maximize your employer 401k or your IRAs. So you put money into those accounts. You set it up so that you don't even realize that it's gone. So every paycheck, you put a certain percentage. You want to at least meet what they're going to match for you, dollar for dollar. So you put the money in there. And then after you're done with the emergency fund and retirement savings, then we call that the opportunity fund. This is where you put a little bit. It doesn't matter how much, even if it's $10 a paycheck or something like that. You just start putting this into that additional fund. You set it up with auto deposit. We'll go into a couple of different options. Put it into auto deposit so you don't even know that, you don't even see it's gone, basically transfers over each paycheck. And then over time that builds into something that you may be proud of down the road. All right, so setting this online auto deposit, again, you've already set up your emergency fund, or you provided yourself something there. You're already investing into your retirement account, and now you're putting a little bit extra here. No matter what it is, any amount would be great to start. And then you can open an account with one of these companies. They're pretty good investment companies. They're low cost to open the account, and they're real easy to utilize. Let's see. So Ameritrade, for example, super easy to get started. Okay, super easy to link your bank account so that you can, or either link your bank account or you can link your payroll to the paycheck to send that out. So you can do either one. And then usually within 5 minutes you can set up an account, and then they'll let you know when it's approved and all that. And then all of a sudden you're investing money. And the other thing you can do with them is go through trainings, get an understanding of how to invest, what to invest, things like that. All these companies do have really good training in it. And then you can just start putting your money into mutual funds or some type of investment. And over time, it will continue to accumulate. It will dollar cost average. So it will continue to buy at different levels. So over time, your what we call dollar cost averaging, and you're building your wealth that way. And you'd be surprised that a couple of years, you can start to really start seeing a little bit of a dent, make a little bit of a dent into that savings plan. All right. All right, so the last one to touch base on is using technology to track your budget and your net worth. So many people don't even have a basic budget. So many people don't even know what their net worth is. So they don't have any plan in mind or any savings or anything going on. So technology is an easy way now to utilize to get yourself started. So I'm going to give you an example of our app. Now, there's other apps that are out there, but our app that we came out with Neo is really, really fantastic. It's free. I'll show you how to get it if you want it, or you can provide it to your kids or anything like that. So we're going to go over exactly the things that it does. It does, number one, it can track your credit. Okay, so it's better than like freecredit.com or whatever those places are that give you your credit score. So it'll actually give you a credit score. It's a soft pull, so it doesn't hit your credit. And then you can actually use it as a simulator. So if you want to add an account, pay an account off, do something else, you can actually go in there and simulate what you want to do, and then it can tell you the effect that it'll have on your credit score. So really cool stuff with the credit monitoring. Okay, you can actually monitor your assets as well. So you can link your bank accounts to this so that it'll monitor your assets. You can set up budgets with it so that you can have an ongoing monthly budget. You can see how you're tracking versus your budget, along with your savings, tracking your assets and your savings over time. And then on top of that, it can also calculate or can also monitor your mortgage readiness. So if you've got somebody who might be using this app that wants to buy a home in the future, so it'll track your credit, it'll track your assets, it can even track your income, and then overall mortgage readiness, so that you can basically stay in what we call the green if you're mortgage ready, or you get to that point to where you're mortgage ready. So really cool tool here that we have all our clients are able to get now at no cost. And I'll also have included this in the email that I sent this with, but you can go to your app store for either the iPhone or Google, and you can download the Neo Experience app, okay, Neo Experience app, and then you use the code SteveB23. All right, so if you want that on your phone, you can go to the code SteveB23, or if you want it on your computer, this link right here that I'll put into the email as well that you can get. And then there's a lot of other things that it does for you in terms of if you already own a home or anything like that. But the real cool technology here, again, is to keep you on pace and to get that savings and building wealth mindset into you, your kids, or whoever you're sharing this with. All right, let's see. All right. What's easy to do is also easy not to do. All right. This is, I definitely have had this in my past. Money, like emotions, is something you must control to keep your life on the right path. So just keep in mind that these are easy things to do. Maybe you can set some of this stuff up in a day or a weekend or anything like that, and then get yourself onto the path to savings. And again, feel free to please share this with kids, friends, family, anybody that you think might benefit from this. So make it a great day and wish you the best towards building financial wealth.